Colleagues, we are starting in a moment. We are waiting for one more speaker. We're going to start soon. So, dear colleagues, we're going to start. We are waiting for one more speaker, but I know this person is very busy, Alexei Sobolev, Deputy Minister of Ukraine. So as soon as he comes, we will give him a talk. So my name is Natalia Shapoval. I'm Vice President at Kyiv School of Economics. So we are running a university and a think tank in Ukraine. And today I'm honored to moderate a panel on private sector mobilization for recovery of Ukraine. And we have a distinguished panel. So as we already know, we will have representatives of Ukrainian government soon. We're going to have basically everyone who is very actively working already on mobilizing private sector, which is European Commission, AFC, EBRD, Deutsche Bank, and Ukrainian banks, Natalia. So I'll present everyone when we start, but just to say it's really great exhibition today, and it's one of the ways how Ukrainians and European companies can really start forming these ties and businesses together, and this is like happening in action. So we finally have Alexei. And Alexei, please, maybe we will give you 1 minute to breathe. And instead, we will start from maybe Jakub Borotynsky, okay? Jakub is Director of the Department for International Market, Industry and Entrepreneurship and SME in European Commission. So EU is one of the supporter of Ukraine, and there is the dream of everyone to enter the European Union one day, and it's a really important symbol during the war, and with all the solidarity lanes, trade and reforms, support on the battlefield, a lot is going on, and private sector is benefiting a lot, and there are already instruments that are great and really working for Ukraine. So maybe we will start from you. Maybe you will share some secrets when Ukraine gonna enter EU. What are your expectations and what mechanisms are already working for Ukraine?
Thank you very much, Natalia. It's a great honor to be here with you. On top of it, it's my home city, so that it's another layer to this. Your question, I think Director General of DG NIR, the highest civil official in charge of accession process, he said, of course we don't know, but we hope sooner than later. But I think what is extremely important to bear in mind that we should not be, let's say, focused on, on this date of accession as such, because the very fact that I'm here on that stage, I do not represent, the department of the Commission that deals with enlargement, with accession, but I represent basically one of those departments that are responsible for important policy, internal market and industry. But the fact that I'm here is basically a sign that it's whole of the Commission is engaged in this process. Whichever policy it is, you have people who basically really work towards integration of Ukraine, because integration of Ukraine is basically not a day when this will be a formal accession, but what is happening now. That we basically involve our Ukrainian partners, being it authorities, being businesses, being civil society, in what we do. So when you ask me, when the main, let's say, subject of today, how to mobilize and why is it important to mobilize private investment? Well, because basically we need private investment for Ukraine, but we need private investment in the EU. You know, the question of competitiveness of European economy is very much on the minds of the Commission. And I would say the fact that our investment in Ukraine, it's not just we want to help Ukraine, but it's a mutually beneficial exercise, you know, that basically Ukraine is a very valuable partner because of its market, because of its people, because of its industry, and especially in the times that the world around us is being increasingly uncertain, the fact that we can work together, that we can actually create new value chains between European and Ukrainian companies, it's a very important element of why we need to mobilize private investment. I would also say that that was also the message we heard loud and clear from the first days of the full-scale invasion when Ukrainian officials, ministers coming to Brussels were telling us, you know, we don't want giveaways, we want to make business with you because in that way Ukraine is going basically to emerge from the war successfully. If it's not just relying on obviously on donors, on grants, but that basically there is a thriving business. Listen, I think I may not basically trade secrets, but I think it's indeed useful to recall what is in place and what are the opportunities, you know, for mobilizing private investment. So as you probably all know, Ukrainian facility is this latest, 50 billion package where we basically want to support Ukraine through grants, loans and guarantees. Apart from direct budget support, indeed is this element which is primarily about the risking investment and attracting private capital through, and this is accompanying Ukrainian plan that is basically a plan developed. Anyway, we'll leave it to Oleksiy to say what the Ukraine plan is. But for us, of course, it is important that all of this is very much linked to the reform of Ukrainian economy and rebuilding of its infrastructure. And all the focus is clear. It's infrastructure repair, energy independence, digital transformation, and more broadly, economic resilience. And again, to follow up on that, on the Ukrainian facility to implement it, we have created Ukraine Investment Framework, which is about partnerships with eligible international financial institutions to mobilize additional private investment. And we have representative of IFC and EBRD on the panel that would basically explain their perspective and their participation into this. Now, already, even though facility was only entered into force this year, there have been already first open call for proposals under Pillar 2, which basically target following investment areas, public sector projects, as well as direct private sector investment and private equity projects mediated by funds. And with the budget of 2.75 billion, covering both guarantees and grants, the call will be open for 12 months with initial proposal submissions in October that we had, and early 25. At that call supports the broader goal of Ukrainian investment framework, that is basically to leverage this, let's say, public capital and to attract in the future up to 40 billion of investment, which would contribute to Ukraine long-term growth. So our assumption is basically that EU public money should play a catalyst role to leverage at least 4 times other financial resources, and of course, especially from private investors. And I can tell you that this very much mirrors also thinking about investment inside the EU. We know that with the public funds, we cannot solve all the problems. The point is to use it in an intelligent manner, which would basically attract private investors. And Hertian, during the opening session, has just announced that indeed Commission has just launched another initiative aimed at strengthening with the EU as well as European Economic Area that includes also such an important donor country as Norway. And this new call for expression of interest invites businesses established in the EU EEA, which are eager to invest in Ukraine, to present their investment projects. And ultimately, what we want as a result of the dialogue with those prospective investors to build a pipeline of transformative private investment contributing to Ukraine's recovery and reconstructions. And obviously, it should follow the Ukraine plan and strategic orientations of the Ukraine investment framework. And again, no-brainer, energy, critical raw materials, processing industry and manufacturing, construction materials. I had just a chance to take part in a very interesting parallel conference on construction. Finally, digital and transport sectors. And 1st of March is the deadline for the interested companies to submit their expression of interest. This big investment, when we think about it, we mostly have in mind big companies, but extremely important part of the efforts is to bring on board Ukrainian SMEs. At least 15% of the guarantees provided under the Ukraine investment framework will be used to support micro, small and medium-sized enterprises, including the startups. And new call for proposals for intermediate lending to SMEs via banks is foreseen for publication in January of next year. And perhaps last element of those announcements relate very much to, again, an effort how to basically diminish the risks. And in that context, European Investment Fund, in collaboration with European Commission and European export credit agencies, has launched 300 million euro export credit pilot as part of InvestEU initiative, which is specifically aimed to de-risk and support exports from EU SMEs to Ukraine. This pilot addresses a critical gap in the market as Russia's invasion led many export credit agencies to limit or withdraw their guarantees for EU businesses doing business with Ukrainian partners. This facility will cover export credit transactions that covers also confirmed letters of credit provided to support the export of goods or services to entities based in Ukraine. And this call actually for European ECA's participation remaining open until end of this year. And I think this is again very important that in spite of the war, with these measures, we can actually help trade beneficial for both sides. And let's say finally, maybe a few words about the business climate. We very much, and I'm also grateful to Minister Soboliev, for the SME strategy. So we keep the fingers crossed for, let's say, robust implementation of the strategy and the action plan. Also in that context, and again, it mirrors also what we try to do inside the EU. We are looking forward to your action plan on deregulation, what type of measures it would bring. Last but not least, from the point of view of assuring, European companies, foreign partners, of course, the fight against corruption remains extremely important. The most recent enlargement report takes note of the progress that Ukraine has made, but I would say that in one of the recommendations is indeed to further improve track record on high-level corruption cases, because this is the high-level corruption cases and how they are being treated that is extremely important from the point of view of credibility of the country. So with that, with the better business climate in Ukraine, we feel, that Ukraine facility can really deliver. Thank you.
Thank you very much. So now we will invite Alexei Sobolev, who is the first Deputy Minister of Economy of Ukraine. And Alexei, you've been working on the Ukraine plan and the Ukraine investment framework from the very beginning. And we've met on many, events where the organizations here heard what is the feedback from the private sector, from government, and a lot is being actually developed and introduced. New instruments are being introduced for the Ukraine investment framework. So maybe you would share how important is it right now for Ukraine economically, and what is the current, your own priorities for the Ukraine investment framework?
Thank you. I think people here can see me at this panel several times already, so I'll try to come up with something new. So on this Ukraine investment framework, what is important that it's actually working. So the money are being deployed right now. A lot of the money being deployed through Ukrainian banks, which are partnering with the IFI partners here. Some of the money are deployed by IFIs here and were deployed. So this transaction that you probably heard, the French one, was also kind of deployed through IFIs and maybe using some of the guarantees. So like the financing flow exists. Right now, where there was the first call of the proposals that ended in that closed in end of October. Right now, we're reviewing it from our side together with the ministries to get the feedback to different IFIs on the different programs. And the call is encouraging because the volume of the programs is quite large. So in order to grow in order to kind of achieve in 10 years average income levels to our neighboring countries from EU, we need to have around 6-7% annual growth. And like however reforms we might do, without the investment and technology transfer, it wouldn't work. And the amount of the investment to be able to have the GDP, right, that reflects high income levels, we need to generate around like 300 billion of investment across the next 10 years. So basically, like achieving the goals of like 10 billion plus FDI for a year is the milestone, and I think the facility is doing that. The other thing that we're seeing, and I think a lot of talk here that we see at the conference, is that real sector is very important. So basically, investment in real sector in Ukraine, in different companies and in processes companies, in different like in industrial production in Ukraine is becoming a thing. And like this also, like with the supply chain transferring from China to closer to Europe, like friendshoring and nearshoring. I think a lot of talks around it and a lot of instruments that the government kind of uses and pushes are towards that. And industry is one of the sectors in the Ukraine plan that are kind of setting the priorities for this Ukraine investment framework. Yeah, that's for the start.
Thank you, Alexei. Yeah, you are like resident speaker of this EU-Ukraine investment conference. Thank you so much. Indeed, when this discussion about investment in Ukraine started after full-scale invasion, many IFIs were saying that there are no projects in Ukraine. Now there are some projects in Ukraine. There is a concern whether financial instruments are appropriate and whether these projects are sufficiently bankable. And this is, lead to invite Arvid Turkner, Managing Director for Ukraine and Moldova from EBRD, maybe to share your perspective on where are you right now with the financing instruments for the current, state of development of the Ukrainian private sector. I know that you are looking into the more instruments for SMEs, for private equity. This is very innovative. You are already participating in the Ukraine investment framework, and you've been doing similar stuff way before it was created. So maybe share your strategic priorities. What are you doing right now in the implementation of the Ukraine investment framework, of the Pillar 2, and what are your programs that you are developing and would like to develop?
Thank you very much, Natalia. Very happy to be here. Good afternoon, everyone. So yes, indeed, EBRD has been very active in Ukraine, and from day one, I mean, we are active in Ukraine since over 30 years, but I'm now talking since the full-scale war. Since the war started, we have invested more than 5 billion euro, and about half of that is in the public sector and about half of that in the private sector. So private sector is indeed very important, and actually the investments in the private sector are growing. Our philosophy is very much to invest now to stabilize the economic performance. Ukraine is having economic growth, and also kind of help companies to look forward into the future and get future-proof for the EU accession. So SMEs, indeed, I start with that, are very close to our heart. SMEs are private sector, SMEs are economic resilience, and there's a lot of potential in Ukraine. So we have various programs for SMEs. So starting at the very small end, we do a lot of advisory projects. We also have grant projects for especially relocation from, let's say, more heavily war-affected areas to safer areas in Ukraine. And we have also a grant program for reconstruction to those companies which have suffered losses. And then there are specific programs, advisory programs, corporate governance scholarships, and Star Venture program, where we kind of mentor and advise companies over a longer period of time. But in order to really to get to scale, of course, we work with the banking sector. And here partners like Oshad Bank and many others are absolutely crucial. So many of you know that the banking sector is very liquid. The loan-to-deposit ratio is very low. And there is, at least with many banks, there is some hesitation to invest and lend. So we are having this portfolio risk-sharing product, which encourages banks to lend and has a high multiplier effect, actually of 1 to 4. So for example, with the investments we are doing in the banking sector this year, we are creating a finance volume in the economy of 1.1 billion euro. And for me, really the beauty of this program is with the specific products, because they are kind of, they're catering to certain client niches. So one of them is, for example, veteran integration. And I know Natalia just reminded me we are working together on veteran integration. Obviously a huge topic for Ukraine, and the more the better, it's needed. Then we have a program for enterprise renaissance, again, supporting SMEs and including those who have suffered any damage. There's also a grant component, which is financed by the EU under the EU for Business. And the recent addition to that program is an energy security support facility, where the banking sector is helping us to finance municipalities, households, small and also medium-sized companies to invest into small-scale energy generation, energy storage, and energy efficiency in order to address the current energy crisis. So again, the demand is huge. We have already at the year end, we will have 500 million already contracted under this program to finance SMEs. And there are a few parameters built into these programs to make sure the guarantees cover a very granular portfolio. So it's not going into big businesses, it is going into the smaller companies. And well, then maybe for the UIF, yes, we are actually the largest implementing partner under the UIF for that first call. We are very grateful. Cooperation is excellent. We have contracted some 500 million of guarantees and also grants and TA funds. And what is, again, so helpful here is that it creates a huge leverage. So out of these 500 million, we have used over the last couple of months some 50 million, but we have financed almost 500 million with these 50 million. So the leverage is 1 to 10. And we have a strong pipeline, and these are, you know, green projects, biofuels. We have invested in Nova Pošta, which is a courier and mail service company, and they are also investing into the safety structures for their staff. And the pipeline is strong, and it really enables financing, which otherwise would not happen, or would happen at terms which are very difficult to accept for Ukrainian companies because of the financial erosion and all the obligations the Ukrainian private sector currently has. Because it's not only about investing, it's also about repairing damage, it's about safety structures, it's about addressing their own energy needs. So there are a lot of investment needs, and some support is required. So maybe I stop here.
Thank you so much. So I will pass to Lisa Kessner, IFC Country Manager for Ukraine. IFC also has been working with Ukraine for many, many years, and you have grown, you know, companies from small, non-diligent state to really great bankable projects and companies. And now you are also participating in the Ukraine investment framework. So maybe you can share a little bit what are the biggest challenges and opportunities right now for involvement of the private sector, given the full-scale invasion is going on, and how maybe IFC specifically is addressing it, like these specific needs of the frontline territories of the all kind of vulnerable groups, very high levels of unemployment and damages. So this is very unique, I bet. What's your evaluation, how different it is, and what are you doing about it in your portfolio?
Thank you, Natalia, and it's really a pleasure to be here on this panel with colleagues. I'd like to actually take a little bit more of a medium-term view and talk about the Private Sector Opportunities Report, which IFC published almost exactly a year ago. We looked at the rapid damage and needs assessment, which I think many of you will be familiar with. It's been cited a couple times already today, where the reconstruction needs for Ukraine are estimated at about $500 billion over the next 10 years. And we went sector by sector looking at what those needs are, and looked back also at what had been Ukraine's track record at attracting private finance into those sectors in order to try to estimate what would be the possible opportunities for the private sector. And what we found was if Ukraine kind of kept a status quo in terms of reforms and institutions, that it would be about 1/6 of the needs that could be covered. But if Ukraine undertakes, as it already is, an ambitious reform agenda also aligned with what is needed for EU accession, and there would be appropriate risk management instruments like the Ukraine Investment Facility, we found that it could be actually 1/3 of those needs could be financed by the private sector. And I think the Deputy Minister alluded to this opportunity, which is also a challenge, to come to the challenges, which is that the opportunities are there, but Ukraine's track record in attracting FDI has been relatively low, historically, related to its peers. So I think for that, some of the opportunities, as I mentioned, are around reforms, those that relate to rule of law, to reducing state presence in the economy, particularly in infrastructure sectors like energy, related to creating more space for the private sector. It's around opening opportunities for PPPs. Ukraine is finalizing some PPP legislation currently. Improving SOE governance, which has been a challenge in Ukraine and to some degree remains a challenge. But I think I'm personally very optimistic. I think the opportunities are huge, and Ukraine is seizing them. For IFC, we're really excited to be part of the Ukraine Investment Facility, but also have support from other governments, which, as Arvid pointed out, has a huge multiplier effect, so that a euro of public support can be multiplied between 4 and 10 times, depending on the project. So maybe I'll stop there with that kind of, I hope, medium-term optimistic outlook.
Yes, thank you very much, Lisa. So now we're going to invite Pana Sturgiu, Global Head of Institutional Client Group at the Deutsche Bank. And you are basically international, huge bank. How do you think about your role in Ukraine? You've been present in Ukraine. Do you think about scaling up the recovery efforts? Do you think about involving more of your clients and investors? And what are the steps that can be taken for that?
No, thank you. Thank you, Natalia, for the question and for being here today. So let me take a step back, as I am the only, I think, person presenting from an international bank here. The Deutsche Bank has been in Ukraine for 30 years. We have had local presence and we remain committed to Ukraine. And during that time, effectively, our main stakeholders have been the government. As recent as 2021, before the war, who used to lead in the capital markets some of their benchmark deals. SOEs, obviously local FIs, but very importantly, multinational companies. Deutsche Bank is a global house bank, one of the largest corporate banks that exist, and we bank over 100 MNCs that have access to Ukraine, providing cash management, foreign exchange, and other services that they require. So we understand quite well the stakeholders. We understand quite well, as I said, have been in Ukraine for a long time and participated in transactions all the way from energy, infrastructure, logistics, agricultural sectors in that time. And both public transactions, but also working with DFIs, doing more kind of bilateral transactions during the time. Now, what have we been doing in the last 2 years, which I think is quite important, and then I can come to the next part. So 3 main things. One is to continue to grow our services to Ukraine, and that is effectively to local banks and to multinational companies. We keep on attracting more and more multinational companies that want access to Ukraine through ourselves. The second is we deploy Deutsche Bank's balance sheet in 2 ways. One, in trade finance, which is vital effectively for Ukraine, and that we work with many of the stakeholders. We work with the BRD, with the IFC. We signed a new agreement at the URC in Berlin a few months back. We work also with Ocean Bank, so we work with all the main stakeholders. And the second part is we work with export credit agents. And I'll give you an example. As recent as July this year, we led and we financed a transaction of 180 million euros for Energoatom to purchase fuel from the UK. And we're in touch with some others, which obviously are not public and I cannot disclose. So obviously there is a link of DFI, IFI, private balance sheet, and effectively a kind of trade finance angle in everything we would do. And lastly, the third pillar is that we're active in advising companies. Again, something that is in the public domain. We advised Metinvest on their asset liability management in terms of rationalizing their debt stack back in Q2 this year. So we understand the country well. We have been there for a long time. We understand the stakeholders. We have a long history of working with DFIs and IFIs, and we remain present, and we would like to do more and participate in many of the ideas that have been discussed today on this panel.
Thank you so much. So all these institutions basically are facing a really huge challenge because deploying these amounts of funds that Jakub, you started talking about, having 40 billion of this investment framework, actual funding coming in 4 years, it's a lot. This is like 10 billion a year, and these are not amounts that were deployed anytime recently in the history of Ukraine. So this is, I think, everyday work of everyone working with the clients, with the banks to develop conditions, to adapt to the compliance requirements that are feasible. And now we will know maybe a story of Ashad Bank, and Natalia Budkova, who is the board member and working with SME, will tell us, how it works in the fields, because you work with the government subsidized programs with very nice conditions, and you work really close with the businesses who are affected by the war in various territories. So maybe you share what programs are you developing, how you see your participation in this investment framework, and what actually works for the business in Ukraine.
Hello to everyone. My name is Natalia. I'm responsible for MSME segment in one of the biggest banks in Ukraine, number 2. And we have like a mandate from a government for supporting MSME. So 90% from all programs, state and international, are realized with the help of our bank. Among our partners are EBRD, GIZ, EFSA, BGK, UNICEF, USAID, etc. And I want to say that we are supporting 15% from whole economy in Ukraine. My business direction was established with the technical support from EBRD. Due to that, we launched micro-lending business and developed medium segment business in our bank. And if you talk about the total market in Ukraine, lending market in Ukraine, from 2020, he grew up by year to year more than 10%. Even this year, SME loan portfolio grows on 15 percentages. We observe a huge rise in 2020 when state implemented two programs, 579 subsidized loans in combination with state guarantee. Also, I would like to mention that in Ukraine, 20 banks working with SME segment actively, and as well as a Bank, we are offering risk-sharing mechanism, grants program, technical support. State as well as EBRD, BGK, EIF are offering risk sharing. For example, the same client in our bank can receive 5 million hryvnias. With the EIF risk sharing mechanism, he could receive 15 million euros. So risk sharing mechanism triples loan amount. It is especially essential in the occupied territories where collateral partially destroyed. So it's really useful for us. Another good example of enhancement of entrepreneurship, this is program provided by Euro Commission together with GIZ and Sparkasse. This program covers all segments, micro, medium and small business, and offers for client not more than 30% from loan amount. So the two main advantages of this program, it helps to increase demand from client, and also each €1 of grants will bring €5 of credit. From the other hand, there are two unsolved questions in Ukraine. How MSME client can receive a loan in a territory near the Russia border and in a territory near frontline zones. Nevertheless, our bank is disburse loan on this territory, but there is no practical mechanism to decrease our risk here. For example, insurance. The bank also offering for client mutual product with local authorities, with municipalities. Municipalities compensate partially cost instead of clients, interest rate or sum of loans. During the war, we launched two separate directions of supporting. First one, this is business of veterans, even startups and exporters. To sum up, I would like to say that Ukrainian banking system has learned to work with all financial tools as well as Bank with very low NPL. For example, in our bank, in our segment, NPL less than 1% in the green and orange territory. This is all from my side.
Good. Now it works. Thank you, Natalia. It's you ended up with these numbers about low proportion of non-performing loans. It's really striking. Thank you so much. So now we have an opportunity to ask some questions. So you just can raise your hand, and we will hopefully have some help with the microphone. If not, yeah, we have help with microphone, please.
Work. Hello, my name is Simon Cassie, and I work for a specialist reinsurance broker in London. My question really is to everybody on the panel. It's been a very interesting session, and I'm very encouraged by everything that you're doing to find investment for Ukraine. But I haven't heard very much about how you're encouraging investors, particularly in terms of the risk that those investors have. And let's face it, there is still a war going on in Ukraine. And the reinsurance market is very interested in supporting these investments through war insurance, through political violence insurance, through political risk, terrorism, sabotage, and credit risk. Let's face it, there is a huge credit risk in investing in Ukraine right now. So I would be interested to know what the panel are doing about encouraging investment through the vehicle of reinsurance, which many of you will know, particularly Deutsche Bank, of the massive size of the reinsurance market. And as a reinsurance broker, this is an answer to my question I'm very interested in.
Thank you. This is a great question. Who would like to start? Maybe Alexei? and then
I'll
Panos.
just start. So to us, it's also like for the government, it's very important that reinsurers are on board. So like Ukraine's insurance market wouldn't work without you. From what we know, like you're not. So like there are some something kind of that doesn't allow you to be involved in Ukraine. That doesn't concern your company, but like the global reinsurance companies. And we are thinking of how to kind of alleviate that. So I think this from two sides we can move forward. From our side, we need to have more instruments on the ground, basically from Ukrainian insurance companies. And this is what the instruments we're developing right now. And one was just signed here before this panel. So and then the Ukrainian insurance company is going to insure this war risk, and then we hope that reinsurance going to reinsure these risks with some help done by the donors to kind of change the premiums for that. So yeah, we're very engaged, and we would like you to be more engaged in Ukraine.
Thank you.
Maybe I can add something on that. So indeed, and thank you for the question. That's an excellent question because we do work, and I think the value of the insurance is crucial to scale up capital. So I think, and this was part of my further observations, I'll be very quick. I do think as the phase is now, which is towards, call it, more reconstruction projects, and hopefully there is sight of an end of the war at some point. I think what is important is to build larger scale projects. And in these larger scale projects, I think what is also important is to start having public-private effectively risk sharing. What we have heard up to now is a lot of DFIs and IFIs and ECAs effectively coming in the country, donors' money, government money, and then local response. We haven't seen many projects which are actually public-private. And this, I think, when we get to that stage, and we should get in the stage in some of the key industries in Ukraine, I think they're all then on the DFI, IFI for part of it. The private capital and the reinsurance can play a role in multiplying and creating further scale into projects. And we have seen that. I'll mention a very quick one. For example, we've seen one, which is a recent one, that actually we worked a number of stakeholders with actually, in that case, EBRD and AFC, which was providing, EBRD and AFC provided the equity capital of a purchase of a large mobile company in the Balkans, in Serbia, and the Deutsche Bank with actually reinsurers came on the senior side, and it allowed actually a full transfer of the full capital structure with only the IFI and DFI being only part of it. So I do think that this should develop fast, and I hope this kind of larger scale projects are put together. There is a need of also, I would say bankability of projects. So I think that has to advance quite fast, but we're able to bring the stakeholders together. But I think it's crucial to answer your question.
Thank you. Do we have? Yeah, we have several more questions in the center. Maybe we can pick three and then everyone. So in the center, and then we will have on the first row, and Lena Kajarny also on the first row.
Thank you. Igor Olechov, CMS Cameron McKenna International Law Firm. Because we have EBRD and IFC on the panel and other speakers, and I was actually interested whether EBRD and IFC can change their priorities and focus more on financing private business. Because I think I read somewhere the statistics that the amount of lending of these institutions to state-owned companies in Ukraine is actually 80%, and which basically means that we are discussing private investment, mobilization of private capital, but at the same time, your institutions are actually financing primarily state-owned companies. Thank you.
Thank you. Maybe we pick up 3 questions. Also on the first row, Nina, if you may. And then one more also on the first row.
Actually, this is not the... my name is Sergey Naumov, I'm CEO of Ashat Bank. So my questions, it is not actually the question, but it is the, how to say, to think about, we have the very big problem in Ukraine with our companies that are working near battlefield. What kind of problem? You all know that, for example, Zaporozhye region, it is half occupied and half under control of Ukraine. The same with Kherson, the same with Donetsk. And the businesses who are working on the controlled territories, exporters, they cannot receive currency proceeds because all the banks, European international banks, consider this region as a Russia and do not understand that partially business are working in these regions. And then compliance, financial monitoring blocked all accounts that not allows businesses to develop. And this problem we addressed many times to many our corresponding banks, but still problem are there. Therefore, once again, I would like to raise this, and many businesses here, they can confirm that there is such a problem with agriculture companies. Therefore, please, once again, take this in mind, and maybe we can change such approach by doing some kind of the mark, sign in the system that these companies are working on under control territories and they may receive export proceeds. So this is not the question, I don't require answer, but please, once again, think about this problem. Thank you.
Thank you. And one last question, and then you will pick up whatever you want to answer.
Thank you. Lena Kazarny, founding partner and CEO of Horizon Capital. I really love, Panos, what you mentioned in terms of catalyzing the large deals. And we're so fortunate with EBRD and IFC catalyzing the French telecom investment, which is over 1.5 billion. And we're honored to work with you on that. What is your call to action to the private sector? Because clearly the private sector needs to be front and center in terms of, pulling these deals together, in terms of getting the backing of DFIs and also strategic investors, equity capital, all of that. So I'm kind of turning around one of my colleagues' question. It's really the call to action to the private sector. What would you want to see in order to bring in that large-scale FDI into Ukraine that's badly needed and needs to be catalyzed by the private sector? Thank you.
Yes. Thank you. So we have 3 questions. One on how to increase investment in private sector and not only in state-owned companies and public sector. Not a question, but maybe you have reflections on working with the front lines and call to action to a private sector. So we'll start from Lisa, but give me a signal and you can...
Great. No, thank you very much for the question about IFC and EBRD's investment in private versus public. I didn't have the opportunity to say very much about what IFC's done financing-wise. So this, let me clarify that IFC's mandate is only for the private sector. So we're part of the World Bank Group, where the World Bank finances the public sector and we finance the private sector. Since Ukraine joined IFC about 30 years ago, we have financed $4.8 billion in Ukraine. And actually about a third of that has been in the last 3 years, so since the full-scale invasion. We do some work through state-owned banks, for example, supporting trade finance, like our colleague, like Panos mentioned. We have an active trade finance guarantee program, and the state-owned banks are a good conduit for that, but the ultimate objective is to reach their private clients who are trying to import essential goods or export something from Ukraine. Otherwise, of the 1.8 billion that we have financed since the full-scale invasion, much of that has focused on SMEs. We're also very proud of our investment together with EBRD and others in Horizon Capital's fourth fund, which Lena, who asked the question, has led. So that's in the tech sector. We've been very active in continuing to support the agribusiness sector, and we're pleased that thanks to the de-risking instrument like the Ukraine Investment Facility, we're now also able to look at more risky transactions in the infrastructure sector, like the telecom deal, but we're also looking at some opportunities in renewable energy and in transport. So we remain very focused on the private sector, which is essential to our mandate. And much of that has been with EBRD, so maybe I pass it to Arvid to complement.
Yes, indeed, Lisa. We are working closely together, but also each IFI has a bit of a specific mandate. So that's perhaps the beauty of the system, that we are complementing each other. So EBRD does both. We invest in the public sector and we finance the private sector, but we have a strong bias, so to say, towards the private sector whenever we can. But given that our mandate is broader, we do both. But just to quote a few statistics on our side, actually the majority of our business is in the private sector. So when I said 5 billion we have invested, close to 60% of that was in the private sector, and then 40-something was in the public sector. And here again, in the situation where Ukraine currently is, I think infrastructure, energy, and these type of deals, financing municipalities, it's absolutely vital for the population, for the private sector to function at the end as well. So I think there is some overlap in the sense of who benefits. And then maybe I can come, since I have the microphone, come to Lena's question. I mean, look, everything starts with having a willing investor. So we do need foreign investors and Ukrainian investors to have the risk appetite to go into the market. And then institutions like EBRD and IFC, we are there to put together large financing amounts which are not available in the Ukrainian market currently. The amounts, the tenor as well. And we are also very good to work with governments and other partners like the European Commission to use the whole system to pull everything together which helps to make the deal happen. Whether these are guarantees, whether these are grants, we are often using grants as well, because we completely understand that in the current circumstances, it is not always possible to finance everything. We are having all sort of technical assistance programs to help clients, for example, to address the labor market challenges right now. That's often a kind of prerequisite to have a kind of successful investment, to get the right people, to train the right people, to have access to skills and talent. So we are pulling together everything we can to make it happen. But I think kind of the core is a willing investor, and I hope we will see more. Insurance also plays a role here, but I think insurance is not a panacea, because there are many national political risk insurances, but that doesn't necessarily mean that we see many investors coming from these countries. So more needs to come together, and smart investors and bold investors is the starting point.
I want to add a few words about private sector. During this year, together with EBRD risk sharing mechanism, we disbursed 43 million euros. It was just only private sector. So that is why I don't know how it could be in another way.
Thank you very much. Do we have some final question? No,
The question from Sergei Naumov was about frontline zones.
Yeah. So I think there are no reflections to it, but it's indeed really what Ukraine is bothered with. So Ukrainian businesses are like real heroes. We don't always talk about it on the investment frameworks discussion, but they stayed in Ukraine. They had to spend their money on relocating their businesses, people, pay salaries where they didn't have revenue. So their P&L looks, not the best way possible. And the more heroic is the business with their work, the worse it looks. And it's like the reality that we need to address. So maybe Jakub.
Maybe just to add on one thing, which is not, well, it's about SMEs, So what we are also trying to do, and I think this is in a sort of, we have a small even illustration during this ReBuild Ukraine Expo. So in the European Commission, we basically have this networks supporting SMEs, such as Enterprise Europe Network. We are also supporting a lot clusters across Europe. And I must say that Ukrainian companies are very much part of this, I would say, ecosystem of this network, which is, again, bringing together SMEs from across Europe, creating new business venture, finding trading partners. And actually, as we speak, we have in the European Commission stand in ReBuild Expo, actually, over 300 matchmaking meetings that have been actually arranged between companies. I mean, half of them are online, half of them offline here physically. But it's just a small example of the effort that I think from a also public sector we can make through ultimately also a variety of activities which we haven't so much spoken today, but which are under Pillar 3 of the Ukraine facility about technical assistance, and that actually also means, investing in this, let's say, soft infrastructure and making sure that Ukrainian companies are de facto integrated with the partners across Europe.
Thank you. Thank you, everyone. This is the end of our panel, and many thanks from all Ukrainians, businesses, that you have such a great teams working every day on Ukraine and make Ukraine grow and entering EU possible. Thank you.